Hello and welcome to BQ Prime. Are you watching Earnings with BQ? And my guest today is Mr. M R Kumar, Chairman of Life Insurance Corporation of India. LIC, one of the largest insurers in the country, came out with earnings last evening. And joining me is Mr. Kumar, who's going to take us through the earnings. Mr. Kumar, let me start with the first thing. Your VNB margins at 14.6%. There is a plan of or a medium term plan that you had indicated how to take it forward and raise it to margins which are equivalent to some of the private players. Where are we on that plan?
We are on that plan. We continue to be on that plan. The trajectory was good. Although you might find that we started off at 9% margin, we reached 14.6 and it continues to be 14.6 now. The only reason for that is the quarter to quarter, because of the change in product mix, that is still not settled fully, because we had initially a lot of annuities and then we found some competition in rates. So we have raised those rates now. In this quarter, we have started picking up the annuities also. So having said that, I think the medium-term target of reaching up to 20% and 25 by FY25 is very much on.
Um, you know, I wanted to ask you one question on the budget proposals, because the government has come out with proposal with respect to high premium policies. LIC has significant amount of that, and now that even on a consolidated basis, if it crosses 5 lakhs, it brings in some kind of cap and taxation for the insured person. What is your take on it, and where does LIC, what kind of what kind of exposure that LIC have to such high premium policies?
Yeah, we have good numbers of this, but if you look at it from the percentage point, out of the total portfolio of policies, we have about 25 crore customers. We have hardly 0.12%, which comes in this category of 5 lakh premium and above. So that is not much. That is hardly having any impact. Number one. Number two, I think last few years, entire industry is pushing insurance as a product, more rather than as a income tax kind of a solution. So having said that, I think LIC also has been doing that. And if you look at this from the budget and from the taxation angle, the data that I have is that 6 crore income tax payers in this country, we have already 20 crore customers, which means we have 14 crore customers who actually have nothing to do with tax, right? So we are actually focused on selling insurance as a product, as a financial product, as a basic financial product, which one should have before one gets into other complicated products like mutual funds and other things. So we don't at LIC don't see any reason to be alarmed by this. In any case, this is an impact on this on the customer also is going to be long term. It's not immediate. It is at the time when the policy matures. And also the provisions say that if it's a death claim, then the customer is not impacted because the nominee will be getting the money. There's no tax implication there as well. So I don't see this really spoiling things for the insurance industry.
Mr. Kumar, one of the key questions that you've been asked throughout last 1 week, I think, is on the Adani Group and exposure that LIC has on an Adani Group. I know you have come out with a detailed statement which was presented to the Parliament as well. My question is that how is this exposure now with respect to equity and debt? What kind of gains, mark-to-market gains, are you sitting on this exposure?
Oh, I will not be able to tell you about the M2M because then that is something that is seasonal and it has to be reported to the stock exchanges. But on the book value, as we have already said, it is hardly 0.1% of the AUM. And since that's a very low, very minuscule, I am through your channel reaching out to all my customers, policyholders and shareholders to assure them that, they don't have to worry at all. It's a very small portion. Also, we are trying to engage with the management of Adani. We have reached out to them recently, and hopefully my team will be meeting with them maybe in a week or 10 days from now to understand what really is happening. That maybe later on we can also get back to all of you to tell you then what really is happening and what transpired in our discussions with them. That is how we are approaching this whole issue. But otherwise, I think there is nothing to worry on this score.
Yeah, one of the biggest things which has been talked about is the exposure, because why do you, as a largest institutional investor, I'm sure investment committee meets with management of the of companies where you are invested, and what has been the initial preliminary take or feedback that you've got from your investment team with respect to this exposure?
No, there is no feedback as such, because you see, the investment in equity is based on certain principles, is based on some regulatory framework. And once we have done it exactly based on that, and also done it with the Committee on Equity Investment, or the investment committee of the board has taken a call on all that at the time of investment, after which we are long-term holders of equity. So we don't really get into the details of the other things. Maybe if it was a debt kind of an instrument, there would be a whole lot of questions around it that would have been asked by the investment team. On equity, we don't. We just go by whether they are the Sensex 500, Nifty 500, so many other parameters to judge whether we should invest in a certain stock or not. So having followed that methodology, so we don't have any reason for trying to go back to our paperwork and see, have we done something wrong? No, there's no such thing. We have done exactly what is within the framework. So we'll have to just wait and watch and see what happens.
What about the debt exposure? Because I guess it's not as big, but it's a small, it's still a decent exposure that you have.
So that debt exposure on the book value is around 6,000 crores. And it's a standard asset. We are getting all the payments.
Sir, as one of the largest investors in the market, what is the kind of total equity investment that you did in the market in the 9 months?
I really don't have the data with me. I can share it with you a little later if you don't mind. Yeah, I'll be doing that. So,
okay, Monal, you have to unmute yourself.
Hello, sir. I had a couple of questions on the numbers. In terms of market share, we've seen a decline in the 9-month period. It's, I think, a 1.6% fall. Are we doing something to go ahead and recapture that market share, or do we see this sort of competition continuing, and how will it impact our numbers?
So competition is always going to be there. We have been with competition past 20 years now. But if you look at Q on Q, or if you look at from last year to now, I think we have gained. It is only that for a certain period we have lost the market share. But by the end of the year, we are confident that we will be going back to the figure a little more than what we had as on 31st March 2022. That we are very confident of. As I said, the variation in the sales of non-par products depend on a lot of things. For example, ULIPs will depend on market conditions. Annuity will depend on the rates. And we did increase our rates in Q4 now. So we are seeing better traction on the annuity products. They are growing the annuity also very well, and we will be possibly seeing better in terms of AP going forward on non-par, and therefore by the end of the year, I think we should be regaining that market share that you spoke about.
So in terms of non-par products, what is the product mix target that we are having? What percentage share in the product mix are we targeting?
We are targeting anything at least 15%. As of now, we are 9.45%. We started off at around 6, then 7%, and last quarter was 7.8, then 8.8, and now we are at 9.45. So we have a target of 15%. That
in Q4?
Sorry?
In Q4?
Yeah, Q4. So once we achieve that, overall, probably the percentage will go up to around 11-12%. So that should work.
And so one more thing on persistency, in terms of number of policies, we've seen a fall after the first year, the 13 months, and then there's a fall. The fall is quite big as compared to the remaining months. So what are we doing on that front,
So we see on premium, we are comfortable. We have been seeing a rise. In fact, we were very comfortable on 61st always. What we were a little weak on was the 13th and 25th, where also we have been growing the last few quarters. What are the numbers? I think purely it is a question of what kind of ticket size we have sold, whether ticket size is small, whether the customer is unhappy with the product and things like that. So there we are reaching out to the customers. We have the revival campaigns to ensure that people, with some discounted interest on the premium, we are able to encourage customers to come back and to pay the premiums so that their risk is complete and the risk continues to be there. So that is giving us some good results. We recently had a revival campaign. Let's keep it going. What is what we called it. So, and the customers have responded well. I think this should work in our favor in Q4.
Sir, at the time of IPO, you were trying to bring in a core system into place where you will digitize everything, and the sales of many of the policies will also go through the digital medium. Where are we on that project? Because you had a timeline of 1.5 years. Are we on schedule to completely digitized and come out as a digitally savvy, digital first insurance company?
Yeah. So we a lot of work on that. There are two aspects to it. One is the new business part, and one is the renewal premium payment. So on renewals, we have seen a lot of traction in people starting to pay through digital means. In fact, month on month, it is growing at 30-40%. Almost 70% of our total payments are digital now in terms of renewal premium. So there are very little people, of course, deep rural areas where we have pockets, because LIC is present everywhere. We still have people coming to pay cash at the counters. Apart from that, I think we have been able to convert most people to digital payment, online payment, Google Pay, Amazon, everything. We have Paytm. We are tied up with everyone. So that has helped. On the new business front, we had an app for the intermediary. It's called the Ananda app, where you see, all said and done, insurance requires some amount of talking and this one. So once the talking over the phone has happened, everything else is digital. So everything is keyed in online, and the customer gets a link to pay the premium, and it's done. So with this in place, I think we have sold almost 1.5 lakh policies this year using only the app. It requires much more traction. It requires more growth. And so we are trying to every now and then, increase. There were certain issues with that. The number of times OTP was asked for the customer. So all that has been reduced now. It is made very simple. Also, we are now present on WhatsApp. So WhatsApp services are available for LIC customers through WhatsApp. They just have to say hi to a particular number on WhatsApp. And after that, all this, they get a drop-down box of all kinds of services that are available to them. So we have done quite a bit in the journey. Still work left to be work in progress. Work needs to be done. We are working on that. Maybe by end of the year, we'll have a little more things to say about this.
What about product pipelines, sir, and any particular products which are pending approval from the regulator?
No, we have no. So now you see, regulator has a method of use and file against the file and use method earlier. So we actually start using the product, then file it. And therefore, there are no delays at all. So we have had a lot of new product offerings in the past 6 months, at least 10 to 12 products, out of which the latest one is Jeevan Azad, simple premium endowment plan. And the name Jeevan Azad, we wanted it to, make two things clear that, my life is, I'm free. I should be free of, I should have life insurance. Also, keeping in view the fact that India is going to celebrate Azadi Ka Amrit Mahotsav in August 2027. So we brought out this product. We have a Dhan Varsha product, which is a close-ended product in March. We have a Bima Ratna product, which is only for the bank assurance channel, a slightly differentiated product. So which only can be sold by the banca channel. And therefore, customers who want to buy this product will have to approach through the bank. So many products have come, and some more products.
Has this changed the mix of which are the top products for you in the last 1 year?
No, but all these new products have, in combination, added to the non-par. So one of the reasons the non-par is growing, that most of the products we've been bringing out are of the non-par space. So to that extent, but once they get more traction, some of these products have the potential to become, the very big sellers for us.
Sir, if I look at the return on investments, in the end of Q3, it has fallen marginally on a quarter sequential basis. What could be the reason for that? And do you see, the returns to recover fully? I'm coming from a point of view. Will you be having enough surplus in with you because of the kind of pressure on returns which are coming down?
Actually, there's no pressure on returns. So what happens is that the coupon that we get, the long-term debt that we invest in over the years, 15-year, 20-year, 20. So what we get rate will depend on at what rate we invested at that point of time. So the only way we can overcome those phases of ups and downs in the last 3 decades or 4 decades, that is where we try to counter it by making gains in equity. So if the markets are good and the coupons have also been good in that year, you will see this return rising. And on the other hand, it could go. So we will be readjusting this. So our strategy on equity will always be in line with the coupon rate that we're getting over the past investments. So I don't think by end of the year, I think they should stabilize. It should come back to where we were at the beginning of the year.
And do you, in the next 12 months, as you are one of the biggest institutions, I should ask you this: what is the kind of return that you're looking at from markets in the next 1 year?
It's very difficult to say. I would be sticking out my neck a lot. I don't want people to either get euphoric or worried because I'm saying it. So let's not say it.
Okay.
So one question on whether you would want to venture into health insurance with the whole composite license being discussed, sir.
Certainly, we would be very keen. In fact, when for some time this was opened up also, if you remember, the IRDA had allowed life insurers to sell indemnity type of life insurance. Yeah. We did have a product, but for certain reasons it was shut down. So now that a composite license is being given out for health and non-life, we would be very keen on being in this space. Our agents are already selling this liability health insurance, non-life insurance to many of their customers. And since we have the largest network of agents, it makes sense to ensure that under one umbrella, the agent for the same customer can give the product from the same stable.
So when are we expecting this to fall through, the composite license?
You'll have to wait. I am also waiting. It has to be amended in Parliament first, the session or whenever, after which the law will be enacted.
So how much time will it take to get this launch done once the amendment comes in? Is there a timeline, a quarter, 2 quarters? Because
we have to wait, because once these things go through in Parliament, then the regulator will also have to issue instructions or detailed circulars will come. Only after which, but we will keep ourselves ready.
Sir, it's been a pleasure talking to you today. Thank you very much for joining us on BQ Prime.
Thank you very much. All the best.
Thank you.
Bye.